All right, today I'm gonna discuss something that I learned by going through and staying with price charts for a long period um, about the Zoro liquidity swap. So I was thinking to myself, trading is all about taking entry and knowing with a higher confidence where the price is gonna go. So um, I do more mechanical trading strategies when it comes to scalping gold. But when it comes to forex, I found that trading in longer time frames are the best, as a lot of experts in the trading arena says. So I was thinking to myself, I was using EMAs, I was using trigger alerts, I was using whatnot, all that stuff. So as I matured in the trading game, I realized at a point that uh, the more I mature in the trading game, the lesser and lesser indicators I kept using. So at this point, all I have is this order blocks by Lux Algo, just to make sure that I've drawn and I've not missed certain order blocks, and it sometimes does not catch a order block. I do draw it, so you can see I've drawn a few order blocks. So this is an advanced concept, but that I just realized by studying the charts. So if you could see, I've also got candle structures here. I've used VWAP and also the EMAs. So if you take the EMAs, we see that the EMAs do give a clear bounce, right? But then the problem was, if in hindsight it gives a bounce, but how would you know now here? How would you know whether price would go up from this point, bouncing from this blue EMA, which is the 9 EMA, or whether it's going to go down? So there's no way of saying. You could just take a blind guess. So provided that the trend is up, the overall trend is up, we could make a marginal guess thinking that the trade is going to go up. But on the other end, you see that the price has been making lower lows here. So how do you know whether this is the highest point that you'll be entering, and whether the price is going to just continue down? Because the price is going to do that. It's done that here. You see that, and it's done that here. So you never know. You never know whether the price is going to take towards the upside or the bearish side. If you know a better way, I truly appreciate if you could just drop a comment, uh, or maybe a link to a source that I could, get a entry with uh, a more higher degree of confidence towards the upside or the down. But then, of course, the EMAs do give us confluence here. So let's switch off the EMAs for the moment. And then I went to the VWAP. The monthly VWAP in the 4 is really good. It's pretty much like a trend line, you can see. So if you could draw a trend line, and as the price crosses the VWAP downwards, you would see that the price is heading down, and once the price crosses VWAP upwards, the price is heading up. But that's also not consistent, So you'll be waiting for how long to take a trade after this? That's 62 days, that's 2 months. I don't know. For me, I'll be too impatient by then. So if I made 1 to 2 or 2% gain on that, it'll not be enough for me. Of course, I could trade other pairs, but just let's stick to this US dollar pair. Because I started as a scalper, I started from crypto. So I started as a scalper and a fast-paced trader. So I need it to be a bit fast-paced. So then what would I do? Okay, I look at this, it breaks the structure here, and it goes down and breaks down the VWAP. Boom, I would enter short. But what happens? What happens is it's going to go up again. So I realized that VWAP alone is also not a good indicator. But let's say, okay, it crossed VWAP and it crossed this structure. All right, it might cross this too. So is it the low? Oh, this. Oh, this. So we really don't know. We think when the price bounces from here, okay, the price might have rejected this, or the price might have rejected this. Okay, so then it goes up to VWAP. So I'm just going through the thought process. Let's say we are here now. So we are we're here now, and we're at the VWAP. Okay, so now from our thought process, okay, the price has broken down. It's broken a few major structures. It's reached VWAP. What would we think? Okay, it's gonna go down, like, yeah. So it's gonna align with the trend line, and yeah, boom, we'd enter a short there. Nice, and we'll be so proud that we did an early entry. Okay, and let's just keep the previous low. That's 2 times the risk to reward. You're happy, and then you let it run. Boom, and it hits your stop loss. So then it occurred to me, this ain't gonna work, So that's 1% gone. So for 62 days, I made 2% because I don't know how it's gonna go. Let's say I just kept 1 to 2 risk to reward. That's a great risk to reward. So I made it, and my trade was closed. And what's gonna happen after that? What's gonna happen after that is I'm gonna take this trade. Then it takes 1% off. So now it's been nearly 80 days. That's more than close to 3 months now. So I've only gained 1% on my account and 2 trades. And that makes me really irritable. That's where I'll get pushed. So then I thought, okay, this is not going to work. Of course, the VWAPs, the EMAs, everything gives confluence. Okay, let's add the EMAs on this. Right now, the EMAs would also say me the same story at the VWAP. The 9 crosses 21, and everything is pointing downwards. It's beautiful, I guess that it's gonna bounce here as the EMA retest, and then it's gonna go down. But so both the VWAP and the EMAs lied to me. All right, because in hindsight we could say, okay, this is significant structure here, and this is the low, and this is the high. Or maybe we could go to the daily time frame and see whether it's the high or the low. But the fact is, once we go to the daily time frame, right? So this might sound like low, but the problem is, in the daily time frame, then this would also be a low. So then, whether we're going to go down or up is going to be a concern again. And for guys like me, who's managing a small amount of capital, maybe prop firms, so that's 141 days. That's a half a year, and we wait half a year just to make a guess again whether the price is going to go up or down. I understand that will be great for guys like Warren Buffett and hedge funds, but definitely for the retail traders, that's not the game that I'm playing, at least. So then I switched off to VWAP as well. Right. So I let the price run, and I kept on studying. I kept on studying this for several days, maybe 200-300 hours at a stretch, sleeping 5 hours a day. I realized that using price structure and order blocks would really help me in this game. So what I'm going to say is, I'm going to close this now. Let's just close this, and I'm going to put the bar replay. Yeah. Let's zoom this a bit. Right. So the price goes up. Price goes up, right? So let the price run now. So I've drawn order blocks where strong price action was initiated. Those candles where upward movement was initiated, or a break of structure was initiated. So those are the places that I've marked the order blocks. I don't know whether it's the exact definition of an order block, but with my experience, I've found that those areas seems to be liquidity zones that the prices would love to snuggle up to. So you see that I've drawn an order block here, and you see the price comes down here, crosses it down, and you see it going up. So it's 2 crosses. Boom. Once it makes the second cross, means its liquidity has been taken. So it crossed and take the first order block. Okay, I've drawn the second order block, this huge wick and this green candle. It makes a downward movement, so that's 1. It goes up, that's 2. So it's like a katana slice, like Zorro, if you remember. I don't know, back when I was a kid, we watched a cartoon or a movie called Zorro. So this guy just draws a Z or a Z, with his sword. It's just like that. Goes down, crosses up to the liquidity, and boom, it's invalidated as well, right? So there's another order block that's down here. Down, up, down, boom. That's 3. So this order block is now being invaded. It goes down, it should go up, right? And you see now what happened here. You see, we should count not the wicks but the candle bodies. Let me just switch off the wicks. Okay, so this was only crossed once, so the price should go 3 times through this order block. So it went up and down. Maybe it should go down. For this order block, you see the price has gone down, price has gone up. So what's going to happen? There's one more strike. It's going to go through this order block like that. Ooh. So the price went through these two order blocks together, and it crossed the other one. So it never crossed thrice in from the top order block. What's it going to do? We ain't got enter short. There you go. It took all 3 strikes. Went up, went down. So that's exactly what I realized. That's how the price plays. You see now this order block we went through once. It should be, so I placed my entry here. Because you know what? Because I know even though the price is here, it just went down. But the price is definitely going to come up to strike this order block. Let me just minimize this to show how I've drawn this. You see this? So it's gonna come, take the Z move on this order block, and then only it's gonna go down. So it could cross any number of order blocks, but unless it crosses for the 3rd time, the order block is not invalid. So the fact is that now this order block is invalid, but this guy is not invalid. No liquidity left to grab. I've made a note there. So trading is a really hard game, so you have to self-learn. You could watch guys, see a lot of stories on YouTube, on web and all that, but the fact is they're not lying too. And this is not the exactly correct way to do it either, but you realize that after studying the charts for hundreds and thousands of hours, you tend to understand price, just like you understand a friend or a person, but you understand the price. So that's how I'll be trading forex here onwards. So pretty much I'll of course use the confluence with the EMAs. Now it makes a lot of sense, right? And the VWAP, right, that is gonna make a lot of sense. Gotcha. All right, I hope so. By the time it reaches here, it'll be the 9 EMA would be here, most likely, predictably. So that will be our entry. So I've just placed it just on a demo here. Let's see how it goes. All right, I think you learned this lesson, and I'm journaling this. This is not financial advice. This is for my use, and maybe if somebody else wants to check for their use as well. All right, you have a good day.
Perfect.